How's it going, investors? Ari Gutman here with the TipRanks team. Now, it's probably no surprise here that the stock market has been on quite the roller coaster ride, and investors are really doing their best to navigate through this high inflationary period while also constantly trying to understand just how aggressive the Federal Reserve will be in terms of combating inflation. As of right now, the market mayhem has made for an 18% decline year to date for the S&P and a staggering 26% free fall for the Nasdaq. However, there's still one expert out there who is saying this is all an opportunity for us. You're going to want to stay tuned to learn who that expert is. And of course, from there, we're going to dive into two high-quality stocks that analysts are currently saying are strong buys. So be sure to stay tuned and, of course, watch today's segment through and through. So if you're an investor, according to Kevin O'Leary, the best thing to do now, since guessing a true market bottom is impossible, is simply take the opportunity to just focus on stocks that you find to be most attractive. With that in mind, our team went ahead to sift through what some of Wall Street's top analysts have identified as two compelling opportunities, both trading at share prices not reflective of their true value. Which leads me to our very first stock of the day. We have Couchbase, which produces and distributes a series of open source data as a service platform, allowing for elastic scaling, workload isolation, and real-time data replication. Now, Couchbase went public last year in July and raised $200 million in its IPO, yet shares have dropped by about half since. And even though the company's top-line revenues have been increasing and net losses have certainly been reduced, we can see that a steady decline of roughly 40% has taken place over the course of the year, where Couchbase is currently trading for $14.69 per share. However, looking into their latest earnings report, Couchbase saw a 34% year-over-year gain in revenue, whereas annual recurring revenue hit $145.2 million. That's a 26% gain year-over-year. Overall, Couchbase appears relatively resilient to macro-related demand headwinds, given its historical focus on large enterprises and multi-year deals. Now, if we go ahead and click on hedge fund activity, it's certainly also very promising and worth noting that hedge funds have been increasing their position with Couchbase, while plenty of users across TipRanks have been doing the exact same. But what matters most is not necessarily where Couchbase is currently, but rather where Couchbase is going, to which analysts foresee plenty of growth ahead for the company, with more than 44% worth of upside on the way, with a strong buy consensus rating based on 5 recent analyst reviews, including 4 to buy and 1 to hold, along with a target share price of $21.25. As for our second stock in the spotlight today, we'd like to bring Helios Technologies to your attention. Now, this company is a provider of hydraulics and electronics that develop, design, and manufacture a wide array of hard technology solutions like control systems to various valves used across industry verticals. As the company has grown, so too has their global footprint, which now spans across 90 countries around the world. The company shared a 10-year goal to reach $1 billion in annual sales back in 2015, and now boasts to be on track to do just that, as they recently brought in $869 million in sales last year. However, more recently, Helios has faced headwinds from supply chain disruptions to pricing pressures. As a result, their stock share price has been on the decline, sinking by nearly 50% on the year, currently trading for $52.17 per share, which may be a gut-wrenching feeling for some, but there are optimists out there, with bullish bloggers covering Helios, to investors across TipRanks buying more shares of the company. And finally, we come to our analyst forecasting, where we see plenty of upside potential. A matter of fact, all 3 of the recent analyst reviews here are positive, giving Helios stock an unanimous strong buy consensus rating with 49.03% worth of upside and an average target share price of $77.75 per share. Now, investors, there you have it. From Couchbase to Helios, 2 stocks that are set to soar according to analysts on TipRanks. So while the markets may be seemingly volatile, there are still opportunities that exist out there. Now, we'd love to catch your thoughts on these 2 stocks or any of the stocks that you've recently been doubling down on. So drop those comments down below to let us know. And until next time, thank you for tuning in.